When you start looking at the self-storage market, you said that you can raise rents or you can decrease costs. Raising rents are pretty self-explanatory. What are you doing on the decreasing cost side?
Well, I think raising rents is not as explanatory as you might think because occupancy you might think you might want to be 100% occupied, meaning I got 100 units, I want all 100 of them rented. And that's the way that mom and pop operators work. They're going to go out, they're going to lease their facility all the way up, and they're going to just sit there and they're going to cash flow every single month. Well, what happens is they're missing out on what we call like true potential of a self-storage facility because we want to be about 90% occupied, even 85% occupied. We want to have some empty units. If we're full, we know we're not charging enough money. So we're raising rents until we have some of each unit type available. That's a lot of our value add. We can increase revenue 15 to 30% year one just by finding true market rent in that manner. On the expense side, we operate it remotely. We have 20 employees in the Philippines. I can start to talk about our team, how we built our firm. We've hired them through Support Shepherd. It's a headhunting firm over in the Philippines. We have 20 folks there. We have another 8 that we've hired through Shepherd on down in Latin America, in Colombia and Brazil. And then we have a fully remote team in America. So we're not paying for a big office building. And somebody pulls up to our storage facility and there's a web address on the gate that says, go to this web address, rent a unit. They can either call us and we can rent a unit for them in 5 minutes, or they can go through on their phone and rent a unit remotely. Boom, they get texted as soon as they rent and pay for the unit. They get a text message with their gate code with a video that shows them how to get to their unit. There's a free lock waiting for them inside the unit. And a great example of this is upstate New York. We have a big property. It's 51,000 rentable square feet. Down the street, there's a traditional Class A office, not a self-storage facility with an office and a full-time manager on site. They have 2 full-time employees working 40 hours a week, $70,000, $80,000 a year in labor. In our facility down the street, we spend about $5,000 a year in on-site, sweeping, cleaning, changing over units, and taking care of the property.
Let's talk about the capital markets. I was reading an article today that was basically saying, hey, shit, right? There's a lot of chaos and maybe not just chaos, but a lot of uncertainty, right? People are trying to figure it out. Recently, we saw that interest rates got raised for a 10th straight time. Talk about what you're seeing in the debt market. And then what are you seeing in the equity market? Are investors still pretty excited about putting money into real estate? Are they a little bit cautious because of the economy? You've been doing this now in bull and bear times. And so what's been the similarities and the differences?
Yeah, in 2021, you could go to a bank, any bank, and get a loan under 4%, a couple of years of interest only, and investors were lining up to stroke money into our deals, frankly. We aren't doing enough deals now. We bought $38 million last year, so significantly less than the year before. This year's on pace to be even slower just because the deals are not penciling. But yeah, equity is harder to get right now, period. The cash to buy the deals from our investors is harder to get. And the banks are way, way more weary and cautious and, more likely to turn you down when it comes to getting a loan. And the interesting thing about real estate, people think about houses where everybody's on a 30-year fixed loan. Commercial real estate, all of our loans are on 3-year, 5-year, or 10-year term. That's the term of the loan. Like, okay, we'll still have amortization schedules out at 20, 25 years, but every 3, 5, or 10 years, you need to the loan is basically called from that bank, and you need to find new debt. So that's one of the reasons why it takes real estate a long time to correct, because it's slow motion train wreck. Okay, first you're operational, the drivers, the economic drivers that drive your revenue and your profit, those start to suffer first. Then you struggle with your cash flow. Then your building's worth a little bit less. Then you're going to your banker. Oh, we got 12 months until we need to, renew this mortgage and find a new place for it. And the bank doesn't want to take your property. There's a lot of stress going on in the background right now among people who do my job. Nobody is having fun in the real estate business. A lot of people on social media, they'll say, I want to get started in real estate. I want to get started in real estate. It's the most common question that I get. And my first question back to them is, how much cash do you have? How much cash do you have? And then some of them will say, oh, no, I got like 10 or 20 grand. And I'll be like, okay, well, do you have wealthy parents? And that's a pretty straightforward question. Like, do you have somebody who trusts you by blood who can invest money into your real estate deals? And they'll be like, no, I don't know. They're middle class. They'll be like, okay, do you have wealthy friends? Like, are you at the country club where you have the investment bankers and the entrepreneurs there who are willing to invest money in your deals? And they'll say, no, I don't really know where I would come up with it. And I'll say, okay, where would you come up with $1 million to buy a property, or a couple $100,000 to buy a $500,000 property? They'd be like, I don't know. Okay, well, forget real estate and go focus on making some cash. Mm-hmm. Come to real estate. People think, oh, I'm going to get rich in real estate. I'm going to get rich in real estate. Turns out real estate's a really bad way to get rich. Real estate is a great way to turn your lump of money that you already have, the wealth that you already have, into a lot more. There's tax efficiency. There's the long-term tailwinds of owning real estate. But the people who want to get into it, with no cash and no experience, I'm not saying it can't be done, but it's very tough.